Welcome back to the Pro Ticker Podcast, everyone. Your Monday morning edition covering major financial magazine headlines.
Yeah.
And
A
wow,
roller coaster of a week?
what a roller coaster.
Yeah, absolutely.
We're diving straight into the deep end today, folks.
Yeah.
Financial news. It's buzzing right now. Significant market downturn. New tariffs seem to have just arrived out of nowhere. And palpable anxiety, I think you could say, about a looming recession.
Yeah, palpable is a good word for it. There's a lot of fear out there.
Yeah. Trying to piece it all together can feel a little bit overwhelming, I think, for a lot of people.
It's a lot to digest for sure.
It is, and that's exactly why we're here to help kind of navigate some of these prominent headlines with you, draw out the crucial insights, what's really important.
Yeah, cut through the noise.
Yeah. And help you understand what might be most important for your financial picture.
For sure.
So, where do we even begin to make sense of this whirlwind of information?
Well, I think the natural starting point is the markets, right? I mean, they don't lie.
Right.
And they've been taking it on the chin this week.
Yeah.
Market Watch, Bloomberg, all the publications are talking about, they're using some pretty dramatic language. Carnage, rout,
Yeah, they're not holding back.
No, not at all.
Yeah.
And, Market Watch pointed out that this was the worst week for the S&P 500 since March 2020.
Ooh, that's a tough comparison to hear.
Yeah, that gets people's attention. I mean,
March 2020.
March 2020, that was, beginning of the pandemic.
Yeah. A lot of unknowns.
A lot of unknowns.
A lot of uncertainty.
Yeah, and I think for a lot of folks, that brings back, not so pleasant memories.
For sure. I mean, that really puts it into perspective,
Yeah.
that date, that time frame. So what happened? Why this past week?
Well, the prevailing narrative is that the tariffs that President Trump announced,
Right.
across the board, 10% tariff.
Right.
And then these higher reciprocal tariffs
Right.
targeted at certain nations.
Yeah, Market Watch, Bloomberg, they're all pointing to this as kind of the trigger,
Yeah, I think that's right. I think it really caught the market off guard.
the speed and the breadth of this announcement.
The speed and the breadth, for sure. I mean, no one was really expecting this.
Yeah.
Yeah. So to have this just kind of come out of the blue like that.
And so widespread.
Right.
Like everything.
Yeah. And so, it wasn't just the initial market reaction. I mean, obviously that was huge. But you've also got a lot of prominent voices coming out now giving their perspective on the potential long-term implications of this.
Right. Yeah.
So, for instance, Market Watch, they highlighted Bill Ackman. He's warning of an economic nuclear winter.
Yeah, I saw that quote. Economic nuclear winter. That's pretty
dramatic.
Dramatic, yeah.
And then he called for a 90-day timeout on the tariffs.
Right.
What's interesting about that is that Ackman, he has in the past been supportive of President Trump's trade negotiation tactics.
Yeah. Right. So I think this suggests a real and kind of unexpected level of concern about the direction things are headed.
It does. It makes you wonder, what's different this time?
Yeah.
What is it about this announcement, this policy that has triggered such a strong reaction from someone who's previously been more aligned with, at least the approach?
Exactly. Yeah. Is it the across-the-board nature of it? Is it just the potential for things to escalate quickly?
Yeah.
We don't know, but it definitely is eye-opening, I think.
Yeah. So we've got that perspective. And then on the other side of the coin, we have from within the administration a more stay the course.
Yeah. So Market Watch talked about statements from Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick.
Yeah.
And, they maintain that the administration is going to stay the course on this.
Right.
And they argue that numerous countries are actually seeking trade deals with the U.S. right now.
Right.
And they're painting these tariffs as leverage in those negotiations. Right. So their interpretation is that this is all part of the plan.
Yeah. It's a strategic move, to get better trade agreements for the U.S.
Right. So we have a very different interpretation.
Right. You've got economic destruction versus, path to better trade.
Yeah. It's really interesting, isn't it, to see these two completely different interpretations of the same policy.
Yeah. I think it really underscores the uncertainty that these kinds of broad economic shifts, create.
Right. And then, we have Market Watch also included some pretty stark warnings from figures like Larry Summers, Senator Adam Schiff.
Yeah.
They're using the phrase Trump recession.
Right.
I mean,
It's a loaded term.
It's a loaded term. It's a big statement to make.
Yeah. I mean, I think it really highlights the the potential for disagreement among even seasoned economic observers.
Yeah. Yeah. And it's also a good reminder of how much is at stake here, you know?
Yeah.
Like, this is not just an academic debate. This has real world consequences for people.
Yeah. Yeah, people's jobs, their livelihoods, their retirement savings.
Absolutely.
This is serious stuff.
It is. And MarketWatch even mentioned, this is interesting to me, they mentioned a potential miscalculation of the tariff amounts.
Yeah.
Now, the American Enterprise Institute.
AEI.
Yeah.
AEI. They're saying that the actual tariffs might be considerably lower
Mm,
than what was initially reported,
right.
and even that the White House might have been aware of this.
Right. So that adds a whole other layer of complexity to the situation.
Yeah. It's like, okay, so the market reacted so strongly, but what if the threat was overstated?
Right.
I mean,
Yeah.
that raises questions about investor confidence and just the extent to which headlines,
Mm-hmm.
even if they're inaccurate, can drive market behavior.
Right. Headlines versus reality.
Right.
Sometimes, perception becomes reality,
Yeah, sure.
especially when it comes to the market.
Exactly.
Yeah. So it makes you wonder, okay, was this initial reaction an overreaction?
Yeah.
Based on maybe incomplete or incorrect information?
Right.
Or, maybe it speaks to just a deeper underlying concern about the overall direction of trade policy,
Yeah.
regardless of the specific percentages.
Yeah. Like the announcement itself, maybe triggered this wave of anxiety.
Yeah. More than the specific numbers.
Right.
Yeah.
And speaking of reactions, Tom Lee, he's a strategist at Fundstrat, he issued this very public apology in MarketWatch for misreading the tariff announcement.
Right. Yeah.
Yeah. He went from calling it Liberation Day to Massacre Day.
Yeah. From one extreme to the other.
Yeah. It shows you just how quickly the narrative can change.
Yeah.
And how hard it is to predict market responses.
Right. Yeah. Especially to these significant policy announcements.
Yeah.
But it is interesting, though, that even though he got it wrong, he still thinks that things will eventually de-escalate.
Right. Despite this significant misjudgment of the immediate impact, he still believes in an eventual resolution.
Right. So that's encouraging, I guess.
Yeah. It's a silver lining,
Yeah.
The immediate future looks pretty uncertain,
Yeah.
but there are still some folks out there who believe that these tensions might eventually ease.
Yeah.
Of course, the question is how much economic damage might be done in the meantime.
Right. Right. Exactly. Yeah. So we've got the market's reaction, the tariffs, the different opinions on what this all means. What about the predictions? Looking forward, what are the big firms saying?
Yeah, so let's look at some of those forecasts. Morgan Stanley, they're advising their clients to brace for more declines. They're anticipating another 7% to 8% drop in the S&P 500.
Okay.
And they see the 4,700 level as a key support.
Wow.
And, what are they recommending? They're recommending defensive stocks.
Yeah, that makes sense. When things are uncertain.
Yeah, classic playbook, right?
Yeah, hunker down.
When the outlook is cloudy, investors, they tend to flock to companies that are perceived as safer harbors.
Yeah.
So things like American Tower REIT,
Yeah.
CenterPoint Energy, Coca-Cola.
Yeah, those are, staples.
Consumer staples, utilities, things like that.
Yeah.
More stable earnings,
Yeah.
less sensitivity to economic cycles.
Right. They just keep chugging along no matter what's happening in the broader economy.
Yeah, pretty much.
Yeah. And it wasn't just Morgan Stanley, right?
No, JP Morgan analysts, MarketWatch, highlighted their assessment. They're putting the odds of a U.S. recession at 60%.
60%?
60%.
Wow.
So more likely than not at this point, in
Yeah.
their view.
Right. And that's a pretty concerning number.
Yeah, it's a sobering statistic.
It is.
And when a major financial institution like JP Morgan comes out and says that, it definitely reinforces those fears that are already out there in the market.
Yeah.
And it can influence investor behavior.
Yeah, for sure.
Yeah.
For sure. And, we've also got Jamie Dimon, CEO of JP Morgan. He issued this shareholder letter.
Right. Bloomberg talked about that.
Yeah. He's urging for a swift resolution to the tariff uncertainty.
Yeah, he's not mincing words.
No, he's not. He's
Yeah.
also cautioning against the fragmentation of global economic alliances.
Right.
He's concerned about potential inflationary pressures as a result of these policies.
Yeah, I mean, for the head of one of the world's largest banks to come out and say that carries a lot of weight.
Yeah. Jamie Dimon's views are very widely respected.
Yeah. And I think his focus on the potential long-term damage to trade relationships is really noteworthy.
Right. Yeah, his point about the cumulative negative effects over time, not just in the immediate term,
Right.
that's something to really consider. It's like the initial reaction might just be the beginning
Yeah.
if these policies persist. So then we've got Tim Duddy, a very well-regarded Fed watcher.
Yeah, I follow him closely.
MarketWatch had a piece on him. He suggests that Fed Chair Powell may have made a hawkish pivot,
Yeah.
even amidst this market turmoil.
Right.
Powell removed language from a recent speech that had previously suggested that rate hikes were unlikely.
Right.
So this seems kind of counterintuitive, right? The markets are signaling distress.
Yeah, you would think they'd want to calm things down.
Right.
But it looks like they're still focused on inflation.
Right. So can you unpack hawkish pivot a little bit?
Yeah, so a hawkish pivot from the Fed, it basically means they're shifting to a more restrictive monetary policy stance.
Okay.
So even with this market downturn, the fact that Powell took out that language downplaying rate hikes,
Right.
it suggests that the Fed is still worried about inflation.
Right.
And they're not ruling out further interest rate increases
Right.
if inflation stays high.
Right. So that's a delicate balancing act, isn't it?
Yeah, it is. It's a tough spot for them to be in.
Because, if they raise rates, they could destabilize the markets even further.
Yeah, exactly.
Yeah. And then we have the expectations of market traders. Bloomberg reported that there's this growing anticipation for Fed rate cuts in 2025.
Yeah.
And even a possibility of an emergency rate cut before the next scheduled meeting. Right.
So, this seems to contradict the idea of a hawkish pivot. you
Yeah.
know?
It does. It shows you, the market believes that the economy is going to weaken
Right,
and that the Fed is going to have to cut rates eventually
right.
to support growth.
Yeah, so we've got this kind of push and pull.
Yeah. It's a classic tug of war between the market and the Fed.
Right. The market's saying one thing, the Fed's saying another.
Exactly. The market's saying, hey, we need lower rates. The Fed's saying, no, we got to fight inflation.
Right. Yeah, it's going to be interesting to see how this plays out. So we have the market reeling from tariff announcements,
Yeah.
experts predicting further declines, and a heightened risk of recession.
Right.
And then this, this back and forth between the Fed and the market.
Yeah.
Okay. So how is this all impacting different parts of the market
Good question.
and individual investors?
Yeah.
So MarketWatch had this really, compelling piece about a new retiree. They just called him Ready to Run.
And he was expressing, feeling completely lost,
Yeah.
worried about his portfolio amidst this market crash.
Understandably so.
Right. This is a situation that I think a lot of people can relate to, especially those who are, either in retirement or nearing retirement.
Right.
And they're suddenly faced with this huge market volatility.
Yeah. You're planning for years and years and years,
Yeah.
and then all of a sudden,
The rug gets pulled out from under you.
yeah, the rug gets pulled out. Exactly.
Yeah.
And the advice in the article was really good.
Yeah. What do they say?
Well, they emphasize, don't just focus on the S&P 500.
Right.
That's just one benchmark.
Right.
What matters is how your specific investments are actually doing.
Right. Your individual holdings.
Your individual holdings,
Yeah.
exactly.
Yeah.
And they talked about the importance of diversification,
Yeah.
asset allocation.
Right.
They used the Vanguard Target Retirement 2025 Fund as an example,
Right.
which actually held up better than the S&P 500.
Right.
And that's because it's a balanced portfolio.
Right.
It's got stocks and bonds.
Right.
And that mix is designed to cushion the blow, when stocks are going down.
Yeah. Don't put all your eggs in one basket.
Exactly.
Yeah.
Spread the risk around.
Right.
Right.
Yeah. So it's easy to get caught up in the headlines, but it really is about your specific investments
Right.
and how they're performing. And, they also warned against making impulsive decisions,
Right.
like selling off your entire portfolio.
Right. Panic selling.
Yeah. Panic selling. That's the worst thing you can do.
Right. Because not only could you lock in those losses,
Right.
but you might also miss out on any eventual rebound.
Yeah. You could sell at the bottom and then miss the recovery.
Yeah, nobody wants to do that.
Yeah, exactly.
And they also had some good advice about cash reserves.
Yeah. Making sure you have enough cash on hand for your immediate needs.
Yeah.
That's sound financial planning in any environment, but especially during times of uncertainty. Absolutely. Yeah. It's good to have that cushion, just in case.
Right.
So we're talking about kind of the conventional wisdom, right? Like
Right.
stay the course, don't panic, all of that.
Right.
But then we have some of the kind of the more unusual market reactions, right?
Yeah. like Bitcoin.
Yeah, Bitcoin.
So Bloomberg reported that Bitcoin was actually up after the tariff announcement,
Right.
while the Nasdaq, which is, heavily weighted in tech stocks, was down.
Yeah, so that's interesting. It's kind of going against the trend.
Yeah, it's a departure from what we've seen recently.
Right. Bitcoin had been pretty closely correlated to tech stocks.
Right.
So what do you think is driving this divergence?
Well, I think it lends further credence to this idea of Bitcoin as digital gold.
Right. Safe haven asset.
Right. An alternative store of value.
Yeah,
Yeah.
yeah. It's not tied to the performance of corporations.
Right. It's got a finite supply. It's decentralized.
Yeah.
Some investors see that as a hedge against economic uncertainty and, government policies.
Yeah, so it's less about, the tech aspect of it.
Right.
And more about the perceived store of wealth.
Exactly. Yeah, exactly.
Yeah. So what about the traditional safe haven asset, the U.S. dollar?
Yeah. So the Wall Street Journal had an interesting piece about the dollar.
Right.
They're talking about the potential for a weakening dollar
Right.
and what that means for investors.
Yeah.
And it's a valid point.
Yeah, especially given the U.S.'s dominant economic position.
Right. I mean, historically, a strong dollar has often coincided with strong performance in U.S. stocks.
Yeah.
But the argument is that these new tariffs could lead to a weaker dollar.
Right.
And if that happens, it could make international assets more attractive
Right.
because, your returns would be boosted when you convert them back into a weaker dollar.
Yeah.
And it could also have implications for inflation. So the article suggests that, investors might need to broaden their portfolios
Right.
to include more international exposure.
Right. As a hedge against a weaker dollar.
Exactly.
Yeah. And it's a good reminder that, the traditional relationships between these asset classes, they might not always hold true.
Right. Especially when you have big policy shifts like this.
Right. Especially now. Yeah. So let's talk about tech stocks specifically.
Yeah.
MarketWatch had a piece about how, they've experienced significant declines.
Yeah, the Magnificent Seven, they're calling them.
Right. Right. Apple, Microsoft, Amazon, all those.
Yeah, the big tech giants. They've really taken a hit.
Yeah.
And the collective loss in their market cap has been huge.
Yeah.
And it's prompting some comparisons to the dot-com era.
Right. Which is a little scary.
Yeah, it's a little bit unnerving.
It is.
But, I think it's important to remember that those companies are generally much stronger than the companies were back then. But what they do share is this potential for reassessment of valuations.
Right.
Especially for companies where a lot of future growth was already priced in.
Right. So, the expectations were so high
Yeah.
that any little bit of bad news can really
Yeah, exactly.
send the stock down.
Yeah, and with all this uncertainty, investors are starting to reevaluate those growth expectations.
Right.
And MarketWatch also had some good tips for finding quality tech names.
Yeah. I thought that was helpful.
Yeah, for folks who are considering investing in this sector.
Yeah. So it's not about writing off the entire sector,
Right.
but being more discerning.
Exactly.
Yeah. And we saw some very specific examples of how this is playing out. MarketWatch highlighted that Tesla had a price target cut.
Yeah. Dan Ives, a very bullish analyst, he cut his price target significantly.
Right.
And he specifically cited the tariffs.
Right.
And some of Elon Musk's recent actions as factors.
Right.
And Apple also saw a lower price target.
Right.
Largely because of its exposure to China.
Right.
They manufacture a lot of their products there.
Right.
So those operations could be directly hit by the tariffs.
Right.
So, these are just a couple examples of how these macro policies, these big picture things, can really trickle down and affect individual companies.
Yeah, the ripple effects.
The ripple effects, exactly.
And it's not just the U.S. markets that are feeling this, right? Bloomberg mentioned that Thailand, they're actually banning short selling of stocks
Yeah.
temporarily
Right.
to try to calm their market down.
Yeah, it's a pretty drastic measure.
It is.
But, they're trying to stabilize things.
Right.
Short selling can really put downward pressure on stocks.
Right. Especially in times of stress.
Exactly. And so by banning it, they're hoping to just, reduce that downward pressure and kind of restore some sense of calm.
Right. Okay. So Bloomberg also provided this really helpful glossary
Oh, yeah.
of key market meltdown terms.
Right. Bear market, correction, all that stuff.
Yeah. Yeah. The VIX margin call, short selling, they explained it all.
Right.
And they also pointed out that the VIX has surged.
Right. The VIX, also known as the fear index.
Yeah, the fear index.
It's basically a measure of market nervousness
right.
or, the level of risk that investors are perceiving.
Yeah. So when it spikes, it means that people are worried.
Yeah, they're expecting big price swings.
Yeah. Yeah. So let's bring it all together.
Okay.
We've got a market downturn
Yeah.
triggered by these new tariffs.
Right.
Experts are worried about further declines,
Right.
a heightened risk of recession.
Yep.
The Fed is doing its thing, trying to balance inflation with market stability.
Right.
And we've got impacts across all different asset classes.
Yeah. From retirees to Bitcoin to the dollar to tech stocks.
Yeah, a little bit of everything.
It's a lot to digest.
It is.
But I think the key takeaway is that in times like these, it's really important to stay informed, understand what's going on,
Yeah.
and don't make any rash decisions.
Right. Stick to your plan.
Yeah, exactly.
Long-term perspective, diversified portfolio.
Yeah, those are your best defenses against this kind of volatility.
Absolutely. So our goal with this deep dive was to provide some clarity.
Yeah, help people make sense of it all.
Yeah. And, hopefully equip you with a better understanding of this complex financial landscape that's unfolding.
For sure.
We'll see you all tomorrow morning with new headlines from major financial magazines.
See you then.
Take care.
Take care.
All right.